Hello and welcome to another Daily Dose of Insights powered by Container Exchange. My name is Christian, and every other week bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Wednesday, so we always take a look at the week in charts, so to speak. So we look at key charts that depict how the container trading world is going, what is influencing demand and supply, etc. Let me quickly share my screen to give you a little bit more guidance of what I'm talking about. As usual, we start with our Exchange Sentiment Index. Concurrently, we ask industry participants on their assumptions of what container prices will do in the coming weeks. Will they increase, decrease, or remain stable? And an index reading above 0 means that the industry is generally positive, expecting container prices to increase. And as you can see, over the past 3-4 weeks, we've seen relatively high level and a lot of stability here in that sentiment. Again, despite significant decreases in prices, and also freight rates now again have stalled their increase, but industry sentiment remains high. Then taking a quick look at the markets, a bit of a different chart today. We're comparing here 40-foot high cube cargo worthy containers in Antwerp on the left-hand side and in Shanghai on the right-hand side, both for this year. And what I want to point out, and this was raised during our exclusive customer roundtable webinar last Thursday, it was very, very interesting, I thought, that in Antwerp, container prices have remained relatively stable at around 20% discount versus the regional average and around 40% discount versus the global average. And the same was actually true in Shanghai. There was a relatively stable market around 10 to 20% discount to regional global averages. But the difference lies in the volatility, and those are the bottom graphs. While you can see in Antwerp, you can see lots of stability since the beginning of June, in Shanghai, it's actually quite the opposite. So you have, since the beginning of June, volatility. So that is the changes in prices week over week has increased significantly. And the interpretation here is that in Shanghai, the market is a lot more volatile right now because of the unstable demand or the unstable market towards Russia. 1 week, there's a lot of demand, a lot of cargo moving. The other week, there's lots of decreases here. Freight rates are too high, shippers are waiting, and so demand plummets again. The expectation is that volatility here will taper off a little bit as soon as Trans-Pacific takes over again a big chunk of demand in Shanghai. Lastly, a very quick look at further headlines of today. Just 2 headlines here. Look at 2023 Golden Week. So that's about 4 weeks from now. In general, we expect carriers to reduce capacity, so blank a lot of sailings during the Golden Week, as well as the 3 weeks thereafter, as there's a significant drop in demand. This year, however, we haven't seen a significant announcement of capacity reduction so far. So right now, only 3% of not vapacity, but capacity, of course, versus an average of 10% in the years 2017 to 2019, so just before COVID. One interpretation, of course, hey, that is still to come. Carriers are really holding off on blanking sailings to see what their competitors are doing, and will then react on very short notice. So shippers and freight forwarders prepare for very short notice periods before sailings are blanked and your cargo is being rolled. And then lastly, Trans-Pacific rates, we just touched upon that when we talked about container prices as well. Trans-Pacific rates in container rates have stalled after double-digit increases since June. So also here, also probably in anticipation of the demand drop off during Golden Week, and seeing that there's no capacity reactions yet, rates have stopped their increase. That's it from me for today. Thanks a lot for tuning in. Take care. Have a good rest of the week, and see you all on Friday.